Today I want to share with you what I can say made me a profitable trader. If there is any one thing that I can say that made me a profitable trader, what I'm going to be sharing with you today is what actually made me a profitable trader. This particular thing changed my trading career forever. It's changed my trading career forever. Just this one thing. There could be a lot of things that are important or that could have helped me along my trading journey, but this one is the most important. This helped me. This actually helped me to become a profitable trader. So you need to please kindly view this video from beginning to the end, because this is one of the most important videos I will ever make. All right, it was when it comes to forex trading. So please, every part of this video is important, so try to view it. So today I want to show you what actually made me a profitable trader, the one most important single thing that actually made me a profitable trader, and I'm going to explain how it actually made me a profitable trader and how it can actually help you as well to become a profitable trader. What is that one thing that I can say that made me a profitable trader? It is thinking in terms of probabilities. Thinking in terms of probabilities. This actually made me a profitable trader. Approaching the market from the angle of probabilities made me a profitable. I'm going to be showing you how it actually did and how it can actually help you to become a professional forex trader. So without thinking in probabilities, you would actually get frustrated in this business of forex trading. Without thinking in probabilities, if you don't think in probabilities, you are going to be frustrated, because there is actually your previous trade could be possibly right, or you could win your previous trade, but you cannot predict the outcome of your next trade. Okay, and you can actually lose this trade, your current trade, and the next trade could be a win. So there is no 100% guarantee when it comes to forex trading. So that is why thinking in probability is very, very important, because it helps you to have the right mindset that puts losses and wins in perspective, and then it helps you to actually become profitable. All right, so now thinking in probability does a lot of things for you. It helps you actually to approach the forex market in like a business. It helps you to approach the forex market like a business. All right, so when I started trading, and in my formative years of trading, I would actually make so much profit in one trade by over leveraging, and next time I would lose everything. I was like, is that how I actually want to? Is that how I want my life to be? Is that how I actually want my life to be? And you know, pounding you are actually trading, and you are trading with fear. Okay, so thinking in probabilities removes fear. The fear of losing disappears when you start thinking in probabilities. All right, you have no fear. You don't have, your high blood pressure wouldn't go up, wouldn't rise, because you have a trade on. No, the outcome of your trade, regardless of the outcome of your trade, you are emotionally stable, because you have this mindset of thinking in probability. All right, thinking in probability gives you a good psychological mindset or framework necessary to become a profitable and successful trader. Thinking in probability gives you the right mindset necessary to become a profitable trader. Actually, this solves your trading problems. Most of your trading problems that you have actually can be traced to not thinking in probability, and it can actually be traced to poor emotional condition. That poor emotional condition, or rather called psychology, trading psychology, is actually hinged on your not thinking in probabilities, because your next trade could be a win, while your previous trade was a win, and vice versa. So when you think in probabilities, you won't get frustrated because of a loss. All right, you won't get frustrated because of a loss. So when you think in probabilities, you actually approach the forex market like a business. Okay, you approach the forex market like a business. You approach the forex market like a business when you think in probabilities. So regardless of your wins, whether you have wins or losses, it does not actually matter, because what matters is at the end of the week you come out profitable. All right, so for me, I can tell you that I can't guarantee, I can't actually guarantee my profit for a day. I can't guarantee if the trades I take in a day is going to be profitable or not, but I can almost guarantee that at the end of every trading week that I'll come out profitable. And then, because when you subtract my losses from my wins, I come out profitable. Even, or I can tell, if I could have a losing day, or a day that I made losses, but at the end of the week, almost certain that I'm going to come out profitable if I take my net profit. All right, I could have possibly also a losing week, a week that I lost, or I came out in losses, but I could almost guarantee that at the end of a month, when you aggregate all the trades I take, subtract my losing trades from my wins, I can almost certainly guarantee that I make a profit. I come out profitably. All right, so I could have a losing day. But still end up with a winning week. Okay, I could have a losing week and still come out with what? A losing a profitable month. Okay, so this is very, very important. So how do you understand the principle of probability in forex trading? You can actually understand the principle of probability in forex trading by understanding what is called the law of large numbers. The law of large number, LLN. All right, what does the law of large number state? It says that there is a random distribution. The law of large numbers says that there is a random distribution between wins and losses in the short term. All right, but in a large sample size, the probability of whether win or lose begin to work. That is the law of large numbers. All right, it is the law of large numbers, and the law of large numbers can best be described using the toss of a coin. All right, using the toss of a coin. Now, when you toss a coin, once, you would either, you know what is a coin? Yes, a coin. When you toss a coin, you have head, just a coin, a currency coin. You can have head or tail. All right, as the first one side of it could be head, another side of it could be tail. Now, when you toss a coin once, you either get the probability of having a head or a tail is 50-50. All right, 50-50, because you just toss it once. You either get a head or a tail when you toss a coin. All right, so but when you toss the coin like say 5 times, or let's say 10 times, you discover that you could get, like, if you toss the coin, let's assume we toss the coin like 10 times, you could get maybe like 7 heads and 3 tail, or you could get like maybe like 4 heads and 6 tail. All right, but the more number of times you toss the coin, probably let's say you toss the coin like up to 100 times, the probability of you getting almost 50-50 increases. All right, that is the law of large number. So the more time you take, the more time an occurrence happens, the likelihood of almost a 50-50 chance of a tossing a coin, 50-50, almost 50-50. Like if you toss a coin up to like 100 times or more, you could either get like 55 heads and 45 tail, almost 50-50, or perhaps 47 heads and 43 tails, or you could even as well get 50 heads and 50 tail, or you could as well get 48 heads and 42. Oh, sorry, yeah, and 52. This one is 53. okay, 52 tail, okay, it's almost 100. The more you toss it, the more time you toss it, the likelihood of you getting 50-50 probability increase. Please just stay with me. I'm trying to drive a point. Please stay with me. All right, stay with me on this. I'm trying to drive a point. So when you toss this coin over 100 times, the probability of getting almost 50% chance increases. All right, so that is to say, if you take one trade, the possibility of you having a win or a loss is what? 50-50. All right, but when you take multiple trades, you take many trades up to like 100 or more, you would either get almost 50-50, 50 wins and 50 losses. Almost. This is called the law of large numbers. That is to say that if I take 1, 2, 3, 4, 5, 6 trades, I should not feel happy about the outcome if it were either a loss or a win. I shouldn't feel happy about the outcome. My goal should be that I should continue taking more trades to have a large sample of trades that will help the principle of large number to work in my favor. I don't know if you get what I'm trying to say. So you need to keep on taking trades, like 100 trades. All right, keep taking trades like 100 trades in order to have the principle of probability to work in your favor. All right, so for instance, if you have a risk to reward ratio of 1:2, and perhaps you take like 100 trades, you would either get like 43, let's say 48 wins, or 48 wins and 52 losses. If this happens, or perhaps you have 45 wins and 55 losses. If this happens, you would be profitable, regardless of all these regardless of the fact that you had more losses than wins. I'm going to show you, but this is dependent on something. If your risk per trade is constant. All right, if your risk per trade is constant. Now let me show you also something. If you are keeping a record of all the trades you take, and you have like the first trade you take was a loss, second trade a loss, okay, next trade a win, loss, win, loss, win, 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 loss, win, loss, loss, win, win, loss, 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 win, win, loss, win, 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 win. So if you journal your trades, your trading results, all right, this is how it's gonna appear. This is how you're gonna appear. You're gonna see that this could be, let's say this is your first trade. Let's say you are taking 100 trades. Okay, this is your first trade. It was a loss. Your second trade, a loss. Your next trade, a win. Just try and do this. I'm going to be showing you, giving you some assignment on what you're going to do in order to validate this theory. This is a theory in trading that has helped many professional traders. So here you had loss, loss, win, loss, win, loss, win, win. This is called winning streak. You had 4 wins in a row. Here you have loss, win, 2 losses in a row, and here you have 4 losses in a row. Here you had 4 wins in a row. All right, that is to say that you cannot actually predict the outcome of the next trade you're going to take. So that is to say that here that you are having losses, do not get emotionally disturbed, because you definitely know that your wins are ahead. Your winning trades are coming. All right, you definitely know that your winning trades are in the way. So what you should important after 100 trades, because 100 has been proven in the forex industry as the as the reliable quantity of trades that will help your statistical edge to play out. So after like 100 trades, when you compute the number of wins and losses you had, it should be almost 50-50, 50%, 50-50. And so if you perhaps you are risking 1:2, you had like each time you win a trade, you are gaining 2 times your risk. All right. So that is to say, let's even assume you made 40 wins and 60 losses, and you are risking your wins. You are 40, you won 40 trades, and each time you win, you are getting 2 times your risk, which is 80. You are having like 80, let's say $80, and you are risking like $1 per trade. All right, $1 per trade. Now your losses would be 60 trades lost times $1. Okay, $1. So you have like $60 lost. Now when your net profit would be $80 minus $60, giving you what? $20 net profit. All right, $20 net profit after having a lot of losses and even some wins. So you can see that when you have a losing trade, do not do what? Do not get angry. Do not increase your loss size. You start taking so much risk. Rather, continue taking your trades, keeping your risk, your risk per trade constant, because you know that your statistical edge is going to work out. Now I'm going to show you two things you need to know that will help you, that will help the law of large number to work for you. Number one is that you need to trade your risk per trade has to be constant. Your risk per trade has to be constant. If you increase your risk, or you have sporadic irregular risk per trade, it's going to mess your statistical edge. All right, so when you have, maybe you are risking $1 per trade, okay, assuming you are risking $1 per trade, and you had wins, you had a win, another win, and you now think that your next trade will be a win, and you now here you risk $1, here you risk $1. Your next trade you now risk perhaps $5, okay, and then unfortunately you had a loss. You discover that this loss would wipe out all these wins, because you increase your loss size, you increase your risk in hope of making profit, in hope of having a win. All right, so your risk per trade has to be constant, and perhaps you had a loss. You lost your first trade $1, lost your second trade $1, and in order to recover, in attempt to recover these losses, in attempt to recover these losses, you increase your loss size and you increase your risk per trade to $4. What happens? You might encounter a loss that would increase all of this, and perhaps you had a win. You had a win. First trade you had a win, $1 as you were risking. Second trade you also had a win, $1. Okay, and you now think that your next trade could be a loss, and you reduce your loss size to $0.5. You discover that you may have a win. You don't know the outcome of the next. You may have a win that will do what? That would have given you more the same profit, and what happened? You already reduced your loss size. All right. And also, let's say you are risking $1 per trade, risking $1 per trade again, but you lost your first trade, lost your second trade, and your third trade, you become afraid. Instead of you to risk the same $1 you are risking, you now risk lower, like say 0.2 or 0.3 or your dollar. All right, and this trade became profit. This third trade became a win. So you would have recovered these losses, because if you had maintained $1 per trade $1 per trade risk, you would have made a profit. You would have made, because you are risking 1:2, you would have made a profit and you retain your risk, you would have had $2, which would have cancelled these two previous losses. So that is why your risk per trade has to be constant. Your risk per trade has to be constant. Else you are gonna mess your statistical edge. All right. So if you don't keep your risk constant, you will mess your statistical edge. So that's the first thing you need to do if you want to you want to allow the law of large number to work in your favor. You need to keep your risk constant, regardless of whether a win or a loss. Your risk per trade has to be constant over a large sample of trade. Your risk per trade has to be constant over a large sample of trade, regardless of the outcome of any trade. So the second thing you need to understand when it comes to the law of large number is what is called the gambler's fallacy. The gambler's fallacy. Gambler's fallacy. Okay, what does the gambler's fallacy mean? It actually means that it's a mistaken belief that if an event occurred more frequently than expected in the past, that it is likely to occur in the future, and vice versa. So what does it mean? It means that the outcome of a previous trade is independent of the outcome of a future trade. The outcome of your last trade does not mean or does not determine the outcome of your next trade. That is to say, if you had a winning trade now, you cannot tell whether or not you're going to have the next trade is going to be a win or a loss. That is what it means. So that is why you need to keep your risk per trade constant. That is why you need to keep your risk per trade constant. Now, for some people, some traders think that what they do, that they possibly risk takes a trade now, had a loss, take another trade now again, had a loss, and some of them would reduce, just as I've explained a while ago, some would reduce their loss size, all right, or reduce their loss size, thinking that the losing streak is going to continue, and next the third trade or the fourth trade becomes a win, and that would have afforded them the opportunity to recover the previous losses they had if they maintain the same loss size. All right. As well, some traders will have wins from like losing streaks. Had first trade a win, second trade a win. Now thinking that the third trade is going to be a win as well, and they now up their loss size or increase their risk in order to get more money. And what happens? They lose that trade, and the previous wins they have had before is being wiped away because they have just altered their risk per trade. So that is the gambler's fallacy. The gambler's fallacy does not means that the outcome of a previous trade does not determine the outcome of subsequent trades. So that is why you need to. No forex trader in the planet can determine the outcome of any trade. It is a matter of statistics. And hence, since you do not know, you're not a magician, you cannot actually tell whether or not your next trade is going to be profitable. What is best for you to do is to keep your risk constant and keep taking trades over a large sample of trades. Your statistical edge is going to work for you. Right? For example, now if I'm trading a prop firm account, for a prop firm account, I actually risk 0.5%. Actually reach 0.5% due to the drawdown rules. In order not to activate the drawdown rules, I reach 0.5% per trade. In order to allow my probability to work in my favor. I mean a funded prop account. But if I'm risking my personal account, if I'm risking my personal account, I actually risk 1% of the account. Because it's my personal account, and I believe so much in the principle of large numbers. I believe so much in the principle of large numbers that regardless of the outcome of my previous trade, my subsequent trades, or rather after a large sample of trades, I'm going to come out profitable. So now I want to show you the fastest way to ruin your trading confidence. The fastest way to ruin your trading confidence. Fastest way to destroy your trading trading confidence. No, and you need trading confidence in order to take trades. All right. So the first way you're going to lose your trading confidence is when you experience a loss, when you did not follow your trading rules. All right. Losses are not a taboo, but it's more dangerous when you take trades when you take a loss doing the wrong thing, or when you have a win doing the wrong thing. All right. So when you experience a loss when you did not follow your trading plan, it destroys your trading confidence. Second thing you need to know that destroys your trading confidence is experiencing a big loss due to over leveraging, or when you've messed up your statistical edge. Let me tell you something. In one day, you can wipe out 1 day of irresponsibility, 1 day of being irresponsible or not obeying risk management rules can actually ruin weeks, months, and sometimes even years of trading profits. All right. 1 day of irresponsibility can wipe out your trading results of many weeks or many months or even many years. Professional traders can tell you that. All right. So, and that is why emotional control is a daily battle. It should be a daily battle. It should be a daily battle. Something that you got to keep doing every day. It should be a daily battle. Daily, something you do daily. Because why? In a secular business, in a secular world of business, you don't need to be in a good psychological condition for your business to do well. You have a trade, maybe you have a shop, or you run a business. Whether or not you are in a psychological framework, it does not affect your business. But in trading, a slight shift in your psychological mindset or emotional condition can ruin weeks, months, and sometimes even years of trading results. All right, because when you are not in a good psychological framework, you would alter your risk per trade. So now these two things, I want to show you two things you need to do, two things you can do that would boost your trading. Two things you can do to boost your trading confidence. Okay, two things you can do to boost your trading confidence, and two exercises. I want to give you two exercises you can do to boost your trading confidence. Number one is, please get a coin. All right, get a coin and do a toss coin, a coin toss. All right, a coin toss for up to 100 times. All right, each time you feel, I actually do this from time to time, each time you feel discouraged by a loss, or each time you tend to forget the lot of large numbers, just take a coin and toss the coin up. Simply toss the coin 100 times, and as you are tossing the coin, record the amount of heads, tail. Just record heads, tail, head, tail. Just as you get the results, as the results come in, keep on recording it. As the results come in, keep recording them. Okay, keep recording them as the results come in. So when you have had like 100 trades, okay, count the number of losses, the number of heads, which might represent either a loss or a win while you are trading, the number of loss and trade, and the number of wins and losses, or rather heads and tail in this case. Record them. All right, when you just record them, this is what you're going to have. Whether you could have let's say you have heads, record the number of heads and tails. You could have 45 heads and 55 tail. You could have 49 heads and 51 tail. You could have 43 heads and 57 tail, 52 heads and 48 tail, but it will be almost 50-50, almost Could be almost 50-50, almost. So when you do this, that will help you to, that will ignite and restate your confidence for you to know that if these were trades, if you are patient enough to take these amounts of trades, it could be within a month, it could be within 2 months, it could be within 3 months, regardless, depending on your trading strategy. All right, on the time frame you trade. This having 100 trades, sometimes average of 2-3 months, sometimes. Because if you have to take 1 trade per day, in a month, we have an average of 20 working days that are not weekends, which we don't trade on Saturdays and Sundays. So almost 20 days in a month that you trade. So in a month you could have, like, if you're taking 1 trade per day, you could have like 20 trades. All right, so on average, if you are taking 2 trades per day, on average, within 2 to 3 months you should have done 100 trades. All right, within 2 to 3 months you should have done 100 trades. So that is where you can actually tell this statistical edge will work in your favor. So you need to be patient. So this is what you need to. Second thing you need to do, the first thing I said you need to do to boost your trading confidence is to do coin tosses frequently. It's called a coin toss. The coin toss exercise. Do it frequently and record the number of heads and tail you have, and think in terms of probability. Second thing you need to do is to backtest your strategy for at least 100 times. All right, you must not do that in a live account. You can do it in a demo account. All right, check the occurrences of your strategy and record them over a period of time. Notice how each trade is completely random. The rating result is completely random. All right, in a small sample of size. If you check your MT4, your trading view account, check your setups and see within a sample size how many times your trades have won, your trading setup has played out. Take about 100 of that. Compute the number of times there was a loss and number of times it was a win. That will help you to appreciate a lot of large number. All right, now what is your job as a trader? Your job as a forex trader is not to determine a winning trade. It's not to make your trades to win. All right, contrary to what you think, your job as a forex trader is not to make your trades to win. You don't have the power to make a trade to result to a win or a loss. You don't have that power. Your job as a trader is to take trades. All right, your job as a trader is to take trades. Just take good trades. Now, by good trade, I mean trades that conform to your trading plan. All right, trades that ticks the dots, or that ticks your checklist of your trading plan. That is good trade, not either a win or a loss. A trade that resulted to a loss can as well be good if you actually followed your trading plan. And a win could be a trade that resulted to a win. It could be a bad trade if you did not follow your trading plan. So take good trades. Just your job as a trader is to take trades. So it now depends on the market. Your job as a trader is to take trades and keep risk constant. Keep risk constant. These two things you do. Take trades and keep risk constant. That is your job as a forex trader. Take trades and keep your risk constant. Now it depends on the market. The market gives you either a win or a loss. All right, the market gives you either a win or a loss. Whether or not you have a win or a loss is beyond your control. What is beyond your control, what is within your control, is to take the right trades and keep your risk constant. So if you do this, you'll be transferred. You move from the level of a losing trader to a profitable trader, and you become a profitable and a professional forex trader. This is what I did. This is the most important thing I did. This is the most important concept understanding I had before I became a profitable trader. So I thought to share this with you. All right, please test these things out and you'll see the results. I've done that personally, and that helped me a great deal. All right, so if you're here to join our free Telegram channel, kindly do so. The link to that Telegram channel is in the description box of this video. What I do is that I actually share setups almost every day how I approach my outlook for the market almost every day. So you can as well gain from those outlook, those chart analysis, and it might inform your trade, might help you to make profitable trade as well. If you want me to mentor you personally on this forex market, how to trade the forex market, you want me to mentor, you want me to take you by the hand until you become a profitable forex trader, you can join my one-on-one mentorship course. And how do I do that? I train you personally one-on-one until you become a profitable forex trader. I show you the secrets you need to know. I help you to learn the market and help gives you assignment and help you to get it right. All right. So if you want me to do that for you at a subsidized rate, contact me. My contact detail is in the Telegram channel that I have, and my Telegram channel contact or link to my Telegram channel is in the description box of this video or the profile section of this YouTube channel. So till I come your way next time, you have a wonderful and a blissful day ahead.